if you look all over the world, nations have been repatriating their gold over the last, really over the last 2 years. Nations have repatriated their gold out of New York, out of London, and brought that gold home to their own territory. And I think that is a function of what was done to Russia back in October, November of 2023, when the 300 billion of treasury reserves were basically absconded with. Nation after nation is looking at that and they're saying, well, if they can do it to Russia, then they could do it to anyone. And, gold is the obvious choice, because if you hold it in your possession, it can't be canceled, it cannot bankrupt. But what you're viewing here, in my opinion, this is the Great Reset.
U.S. President Donald Trump's recent moves are also pulling on London's stocks. Tariffs on gold imports to America are feared, so various institutions are moving gold bars to that country before the threat. BillHolter is a precious metal expert and financial commentator with over 2 decades of experience. Holter notes a global trend of nations repatriating gold to avoid asset seizures, driven by the 2023 freeze of Russia's reserves. According to the World Gold Council, Russian consumers bought 75.6 tons of gold in 2024, a 6% increase from the previous year, but 62% more than in 2021, the year before Russia invaded Ukraine. Regarding the market trends, Holter underscores a major metal shift from London to COMEX. With silver's key delivery month in March, he warns the next 2 months could be critical for short sellers. The Bank of England's gold vaults can be traced back to the 17th century. But over recent weeks and months, unprecedented churn has hit the institution as a shakeup of the global balance of power is played out in the gold market. An outflow of gold bullion is causing long waits among depositors seeking to reposition their stocks outside the UK, home to the world's second-largest gold storage facility outside the U.S. From a technical perspective, Holter suggests the U.S. is onshoring gold in preparation for a global reset, following the principle that he who has the gold makes the rules. He highlights China's massive gold accumulation, estimating it far exceeds U.S. reserves. The People's Bank of China, that country's central bank, resumed market purchases for its vaults in November and is now boosting its stocks to record levels. With Chinese New Year representing a time of auspicious giving, there were reports that consumers had been squeezed in the jewelry market due to the bank's interventions. Now we present the clips of BillHolter's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
There's been a huge influx of metal moving from London to COMEX. You can look at the amount of contracts standing for delivery for February for gold. Those are definitely outsized. Even January was outsized. January was if you want to call it a non-delivery month, it was not one of the major months, yet there was a huge amount of gold. I think it was close to 3 million ounces, 2.9 million ounces in January. So one school of thought is this gold is moving from London to New York to meet anticipated deliveries. Same thing with silver. Silver's the following month out. It's March. So if we get through January, if we get through February, then we've got March for silver. So in the next 45 to 60 days are going to be nail biters for the shorts, simply because if they don't have enough metal, then you get a failure to deliver, and a failure to deliver really blows the exchange up, because in the words of my late partner, Jim Sinclair, what's the value of a contract they cannot perform? If they can't deliver, then what's it worth? It's worth zero. That's one school of thought on the metal moving from London to COMEX. Another school of thought, if you look all over the world, nations have been repatriating their gold over the last 2 years. Nations have repatriated their gold out of New York, out of London, and brought that gold home to their own territory. And I think that is a function of what was done to Russia back in October, November of 2023, when the 300 billion of treasury reserves were basically absconded with. Nation after nation is looking at that and they're saying, well, if they can do it to Russia, then they could do it to anyone. And I think that's a function of nations not wanting to be, if you want to call it, canceled. That they want to make sure that their monetary reserves don't get canceled. And, gold is the obvious choice, because if you hold it in your possession, it can't be canceled, it cannot bankrupt, it can never become a black hole on a central bank's balance sheet. It's always going to have value, and we can get into this later in the discussion, but what you're viewing here, in my opinion, this is the Great Reset. Looking at it from the standpoint of a global reset, this could just be onshoring gold to the United States because the United States understands there's a reset. And the old saying, he who has the gold makes the rules, you want as much gold on hand as you possibly can. Now, this 400 plus tons is chump change compared to what has been accumulated by central banks over the last 3 to 5 years, and really chump change if you compare it to what China has sourced over the last 10 to 15 years. It was really back in, I think it was 2011 or 12, when China began leaking some of their treasuries and onloading gold. I mean, if I remember 6-7 years ago saying, and I mean, it was easily done, on the back of a napkin, I could show you by 2017-18 that China already had 25,000 metric tons. So that number, in my estimation, is probably 35,000 metric tons compared to the supposed 8,300 tons that the U.S. has, which I don't believe they have. So our gold reserves have been dwarfed by China. The entire system is in the process of resetting. And I would think that within, 90 to 180 days, you're going to look back to where we were just 3 weeks ago, under the previous administration and the previous, if you want to call it world order. You're not going to recognize in 3 to 6 months where we are compared to where we were.
In the interview, BillHolter suggests the U.S. could remonetize gold, unlocking nearly $1 trillion in collateral. Given Trump's ties to gold, he notes a gold-backed reset is likely. Whether investors are bullish on the precious metal as a financial asset because they're skeptical of fiat currency, worried about a broader economic collapse, or have other motivations, the spot price of gold has climbed more than 40% in the past 12 months, doubling the S&P 500's gain during that span. No one officially holds more of the yellow metal than the U.S. government. However, a simple accounting change could result in a roughly $750 billion windfall on the country's balance sheet. Still, talk of monetizing America's gold reserves speaks to a difficult needle Treasury Secretary Homer Besant is trying to thread, addressing the country's burgeoning deficit while funding Trump's fiscal ambitions. As the global trade system faces major upheaval, Holter emphasizes that BRICS nations are forming a unified trade system, potentially sidelining Western fiat. While the outcome remains unclear, he stresses that the world is transforming profoundly. Let's get back to the interview.
One obvious thing would be to remonetize the gold that we hold. It's on the books at $42 an ounce. So if they were to remonetize that or revalue that to the current price of $2,900 plus per ounce, you're looking at, I think the number somewhere in the neighborhood of 900 billion, close to $1 trillion. So the gold that we hold actually has value of, use the figure of $1 trillion versus, a paltry figure well under $100 billion on the balance sheet. So that would free up, if you wanted to call it collateral, that would free up collateral that they could either borrow against or spend. And that's assuming that they use the current number of $2,900 an ounce. Now, I had done the math, 4 or 5 years ago, that in order to cover the debt, gold would have to be $125,000 an ounce, and it's obviously more than that now. But what that, if we had a reset and you got to, really high numbers like $125,000, $150,000, that would allow the Treasury to basically cover the debt with gold holdings. And that I don't think would be frowned upon by foreign nations because they've been picking up gold left and right for the last few years, and they have gold on their balance sheets, so it would reliquefy central bank balance sheets across the world. So that's the obvious aspect of it. Revaluing assets. What about BLM land, other assets that the U.S. holds? Could they sell those off? I'm not privy to everything that they're considering monetizing, but you're talking about national assets now that they could be monetized. I lean toward it's a gold solution. It's not necessarily a land solution. And I say this because Scott Bessent, the Treasury Secretary, one of his biggest holdings is physical gold. And you have to look back, Trump's family was a gold family. His grandfather or great-grandfather was actually invested in mines. So that family understands gold, and I think they would understand what remonetizing gold would mean. And I think Trump also does understand that the Federal Reserve is, well, it's neither federal, they don't have a reserve, and the way it was done originally and the way it still is now, basically, it's an illegal operation. It's private bankers. So it wouldn't surprise me to see when all is said and done, where the central banking system itself collapses and you start seeing nations issuing non-interest bearing currency. I think if you look at trade is it's a very finely tuned machine, if you will. You get any type of shocks or big changes to trade, and what it does, it'll slow trade down. And I expect to see big disruptions in trade. You've got the tariff issues, and you've got the issue of how is the world going to settle trade? I mean, when this reset goes through, how is the trade going to be settled? Is it going to be settled in dollars? Is it going to be settled in gold equivalent fiat currencies? And then you've got, the pie gets sliced in half. You've got the BRICS currencies and you've got the Western world. So, are the BRICS going to be willing to accept Western fiat for trade? I mean, I don't know the answer to this. I do know that the BRICS will trade amongst themselves and trade will be pretty smooth because they're all joining a new common currency. I guess the best thing to say at this point is there's nothing in concrete at this point, but we see a lot of signs that the world that you knew is not the world that you're going to know.
As volatility escalates, gold remains the ultimate hedge, offering stability in an increasingly unpredictable world. Considering these factors, the 3,000 milestone looks feasible in the next few weeks. If gold were to make the same gains as it has over the last 12 months, we'd be looking at $4,250 this time next year. If gold does play a central role in this reset, what does that mean for the future of the US dollar and global financial stability? Let us know your thoughts in the comments below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.